Gautam Adani, the Indian tycoon known for his immense wealth and business ventures, has recently made headlines for all the wrong reasons. The Adani Group has been accused of fraud by Hindenburg Research, leading to a drop in the company's stocks and a decrease in Adani's wealth. In a matter of days, Adani has lost $76 billion in market value. In this video, we'll take a closer look at the allegations and their impact on Adani and his empire. Gautam Adani is the founder and chairman of the Adani Group, one of India's largest conglomerates with interests in ports, logistics, agribusiness, real estate and more. Adani's wealth and business success have made him the richest man in Asia, taking over fellow countryman Mukesh Ambani, who's currently worth $83.7 billion. Adani is also known for his political connections to the ruling BJP party. But this guy's not all about making money. He's also known for his philanthropic efforts through the Adani Foundation. Right, now that we know the background of who Adani is, let's understand this situation with Hindenburg Research. Hindenburg Research has accused the Adani Group of being involved in fraudulent accounting practices, stock manipulation, and money laundering for many years. The research firm also revealed that it had taken a short position in Adani Group, betting on a decrease in the company's stock price. Upon the release of the allegations, there was a significant sell-off in the market as investors reacted to the news. On the first day of trading after the announcement, $12 billion was erased from Adani's once $218 billion mining business. This loss was only the beginning, as on the following day, an additional $50 billion was wiped away from the company's worth. Adani Enterprises saw a 19% decrease, while Adani Green Energy and Adani Total Gas declined by 20%. Despite the Adani Group issuing a statement rejecting Hindenburg's claims, the sell-off persisted, leading to Adani performing the worst out of all the stocks in the Nifty 50 index, losing over 1.5%. This situation has created a lot of uncertainty for investors and has raised questions about the transparency and ethics of the Adani Group. The allegations made by Hindenburg Research have caused a significant impact on the market, and the situation continues to develop as investors and stakeholders closely monitor the situation. On January 30th, 2023, shares of Adani Enterprises, the flagship company of the Adani Group, while other group stocks plunged. This resulted in a loss of $50 billion for Adani, making him lose his title as Asia's richest man. Shares of most of Adani's companies had seen a 500% increase in the last few years alone. Adani and the Adani Group have rejected the fraud allegations by Hindenburg Research and have called them baseless and motivated by financial interests. The company has also stated that it is fully cooperating with the relevant authorities to clear its name. Adani Group issued a document on the 30th of January, a few hours before the Indian markets opened, which was more than 413 pages. The report claims that Hindenburg's claims are a calculated attack on India. The document also went on to accuse that the Hindenburg report intended to enable the US-based short seller to book gains, without citing evidence. This is rife with conflict of interest and intended only to create a false market in securities to enable Hindenburg, an admitted short seller, to book massive financial gain through wrongful means at the cost of countless investors, it added. In response, Hindenburg said, "To be clear, we believe India is a vibrant democracy and an emerging superpower with an exciting future. We also believe India's future is being held back by the Adani Group, which has draped itself in the Indian flag while systematically looting the nation." Earlier on Sunday, Hindenburg reported that 62 of our 88 inquiries had not been specifically addressed by Adani. By the way, to understand this whole scandal better, short selling is when someone bets against a company's share price in the expectation that it will fall. The recent report regarding allegations of corruption against Adani has raised major concerns among investors due to the lack of transparency in the Indian corporate sector. CEO of the Global CIO office, Gary Duggan, pointed out that the majority of Indian companies are family-controlled conglomerates, which are inherently opaque, and investors have to rely on their trust when it comes to corporate governance. Adani himself has suffered major financial losses, as much of his wealth is tied to his businesses. According to Forbes billionaire tracker, Adani went from being the world's third richest person to seventh richest, losing approximately $19 billion in 3 days. Hindenburg stated that the Adani Group has previously been the subject of 4 major government fraud investigations, accusing them of money laundering, theft of taxpayer funds, and corruption, estimated to be worth $17 billion. The investigation, which lasted 2 years and involved speaking with numerous individuals and reviewing thousands of documents, claims that Adani family members created offshore shell entities in tax havens such as Mauritius and the Caribbean to generate fake or illegitimate turnover and to launder money. The Adani Group swiftly rejected these claims as a combination of selective misinformation and baseless allegations. Adani Group CFO Jaswinder Singh criticized the timing of the report as it came just before Adani Enterprises was about to launch a multi-billion-dollar follow-on public offering. Hindenburg has a track record of bringing down other companies through extensive research, betting against their shares, and creating public attention about its findings, including through social media. The firm is known for its aggressive approach, which has resulted in stock price declines for some of the companies it has targeted. It's taken on numerous companies in recent years, including Tesla and Nikola, and has a history of making claims that cause significant public attention and market reaction. The firm's research is intended to assist investors and the general public in making informed investment decisions. Adani is still attempting to carry out a massive $2.5 billion stock sale, one of the biggest ever in India, with the goal of financing major expenses and decreasing their outstanding debt. Hindenburg claims that the Adani empire is the biggest con in corporate history. The American firm claimed there were a number of dealings related to Adani's Carmichael mine and rail operations in Queensland, which it believed could have enabled Adani to conceal from investors that some of its assets in Australia had decreased in value. Adani, however, rebuffed this accusation in a statement and declared that the transactions were in accordance with standards and conducted at fair market value. The Adani 413-page response also questions the history of Hindenburg Research, claiming, ironically, for an organization that seeks transparency and openness, nothing much is known about either Hindenburg or its employees or its investors. Its website alleges that the organization has an experience that spans decades, and yet it appears to have been set up only in 2017. This is all sounding like a he said, she said matter. Adani has criticized the US firm for disregarding the Indian legal system and regulators by bringing up past allegations that the Indian conglomerate claims have been discredited in court. This included claims that Samira Vora, an executive of Adani Australia, was involved in a diamond trading scheme meant to deceive the Indian government. However, Adani asserts that this matter has been settled and dismissed. The intense back-and-forth exchange was sparked when Hindenburg dared Adani to take legal action, knowing it would bring additional scrutiny for the coal company. Penny Allman-Payne, the federal industry spokesperson for the Greens, has stated that the Hindenburg report should lead the Labour government in Queensland to re-evaluate Adani's ability to operate in Australia. The Adani project, located in Queensland's Galilee Basin rich in coal, exported its first coal shipment in late 2021 and has faced widespread criticism due to its significant impact on greenhouse gas emissions. But there has to be some credibility to the Hindenburg's claims, right? Well, US hedge fund billionaire Bill Ackman said he found the short seller's report credible. Ackman weighed into the debate on Twitter on Thursday, saying he found the Hindenburg investigation highly credible and extremely well researched. We're not invested long or short in any of the Adani companies, nor have we done our own independent research, Ackman added. The fraud allegations against the Adani Group and its impact on Adani's wealth are still being investigated. Only time will tell if the allegations are true or not. But one thing is for sure, the recent events have cast a shadow over Adani's business empire and his reputation as a successful and wealthy entrepreneur. Well, that's it for today's scandal. Be sure to like and subscribe.